What a year this has been for you. I'd like to start off with just your sense in terms of the operating environment. This chart right here on the Bloomberg really tells the story in terms of high-end Dubai property. You can see this goes all the way back to 2009. You can see the downside pressure, right? This is the price per square foot. This is from Clutton's, both for high-end villas and high-end apartments. What's your take on the Dubai property story at the moment?
I think to understand where we are today, Yusuf, we need to take a step back and look at it from pre-crisis, going into the crisis and coming out of the crisis. In 2008, when up until 2008, Dubai market had been growing. In 2008, not unlike the rest of the world, Dubai had hit a tough financial crisis in which property prices and other asset prices crashed. Took Dubai around about 4 years to come back. If you compare that to some of the other areas, London, for example, in the early 90s, Asia in the 90s crisis, it took them about 9 years to recover, 9 to 10 years. It took Dubai 4 years to recover. And then Dubai had a great run in 12, 13, and 14, as your chart shows.
And so what happens after this line here? Are we going to see more downside pressure going forward?
I think our view is that it's going to be a sideway going for 2017, and I think it's healthy for market to do that. What gets a little worrying in real estate property when prices go up very, very strongly in a short period of time, especially when product are sold on an off-plan and credit basis.
We're seeing, of course, strength in the US dollar, one of the key themes across the shows for the last few weeks. How is that affecting your business? You're concentrated in Dubai, a lot of exposure in Dubai, and this is a place that, of course, gets easily affected by changes in the strength of the greenback.
I think strength of the dollar reflects the strength of the economy in the UAE, and it reflects Dubai and Dubai real estate as a safe haven for investment in many ways on a long-term basis. So what tends to happen, our core markets remain GCC, which are the currencies where the currencies are pegged, so that doesn't impact the strength or the weakness of the dollar. The Asian market, the subcontinental market, we've actually seen more demand from those markets when dollar strength, because fear is a great motivator and people think things will get worse before they get better. And people look for safety, for flight to safety, and Dubai tends to offer that for the region.
So how much cushion do you have against downswings in that Dubai market where you're highly concentrated? Are you planning to expand your assets from beyond the city more than you have already?
I think if you look at our history, we have been predominantly Dubai-focused. About 90% of our deliveries came from Dubai over the last 10 or so years since we've started delivering in 2006. Dubai will continue to be a core market. That needle will not shift because our land bank and our assets and our operating profits will continue to come from Dubai. I get asked this diversification all the time, but I think there's very, very difficult to find a market as attractive and as rewarding as Dubai on a risk-adjusted basis.
Now, some analysts have downgraded your stock on concerns that rising costs will eventually impact your profit margins. Will this be a problem?
Look, profit margin, this industry in its very nature, the development business is cyclical. What you cannot do is wish cyclicality away, but what you can do is prepare and run with cyclicality. And I think you can actually acquire assets at very, very interesting prices when markets are down and deliver and position your products in a way that would allow you to achieve your financial results. Now, the margin in themselves, yeah, obviously when you're in the down cycle, that will come under some pressure, but it's also a function of how you've bought your land, how you've actually positioned your land and developing your land. And I think the way to look at business is on a long-term basis, as opposed to short-term cycles that the business goes in and out. The key thing is to manage your liquidity to be able to weather any cycle.
And that's key, because I'm looking here at the key insights on the Bloomberg, and you've got a cash balance of, what, 8.5 billion dirhams? So what do you plan to do with that kind of money? I mean, maybe some exotic adventures could be on the agenda.
I think we're very, very conservative. We stick to our knittings. We've been good and bad markets. We've had cash balances higher than that, and we've still stuck to our guns and done what we've always done. That cash balance split into what's restricted for projects as per the regulations of the land, where money comes into the project that can only spend on that particular project. We've got obviously very healthy cash balances outside the escrow balance, but all in all, we've got near enough $2.3 billion in cash.